Alex, can I have what is the best way to qualify for a house for $1,000? We're going to find out what that is, as well as, yes, on this show, we talk about the inverse Jim Cramer effect, and then we also talk about the Diana Olick appearance, non-appearance effect. We're going to hit one of those today, all on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, before we jump into it, yes, I know you guys are screaming at me. My phone doesn't stop ringing. I didn't raise interest rates, okay? I didn't do it personally. So back off a little bit and work on the buyer's guide. Keep reading it. I know it's 100 pages of packed full information about how the whole process works. Keep reading it. I know it's a novel, but it also gives you that peace of mind that you need. All right, let's jump into it. You know it, I know it. If you've been on this channel long enough, this has been my take. If there is positive news, Diana Olick's face does not appear on it, even though she's written the article. If there's negative news, you get that girlfriend mug right in your face. If it's half good news, half bad news, well, you get exactly that, right? You get her on a screen, off to the side, halfway there. So let's go read this. The tale of two housing markets, pre-owned and newly built. Well, their narrative there on CNBC, let's go read it. It says newly built home sales grew while existing pending sales plummeted in May. Well, let's go over that. A year ago, we just saw the uptick of new home builds at that time. And so this year now, because of no inventory, we're seeing them explode. Last year, we had a significant amount of existing homes that were on the market, but they were selling very briskly. This year, nobody wants to sell because there is nowhere to go and you can't get low rates. So for CNBC, they think this is a positive, negative thing. For us, we know it's a positive thing, especially if you're a home owner. If you're a home buyer, next. Active inventory continues to decline nationwide. This is insane. It's down 21%. This is crazy what's been happening, over year over year. We're just not seeing, nobody wants to sell. And the reasons why I keep telling people, the only ones selling are flippers, or they're people that are retiring, or thinking about retiring or moving out of state. People that want to move up within the same area, within the same state, just don't have them out there. Nobody wants to go from a 2.5% to 3% interest rate to a 7% interest rate. It's getting ugly out there. So that's what's happening. But we keep seeing active inventory continues to go down. All right. So next one, this is Peter St. Onge, PhD. He actually I actually feel his sarcasm, comedy about the banking system, housing market. He's worth a follow. This is his Twitter account, but I'm gonna go play here. It's about a minute long, and he's gonna talk and discuss about what the Fed's idea of making sure that our financial system is stable. Let's go hear him.
The Fed just announced the results of its annual bank stress tests. One might compare it to passing an exam you wrote yourself, but even with the friend treatment, there were a number of red flags. These annual stress tests were mandated after the 2008 crisis showed the Fed's spectacular failure to keep Wall Street from going bust and using it as a bailout piggy bank. The stress tests model, quote, adverse economic scenarios like recessions and play out whether the banks would go bust. If the banks pass, the Fed usually lets them reduce their capital cushion, which banks love to do so they can hand billions to shareholders and leave taxpayers with the bailouts. Now, it's worth noting that all the major banks also passed stress tests last year, and yet we've already had 3 big regionals go under before the recession even hits in full.
So very interesting what he just said there. It's that whatever the Fed's doing, and we've made fun of them over and over, they're 400 PhDs, they have no clue what's going on. And when they have no clue what's going on, they only hurt the United States. Now, a lot of you out there are saying, well, why do we even have the Fed at all? That's a good question. because the Fed can manipulate our supply, our daily lives. They can come in and they can raise interest rates and they can lower interest rates. But why do we need them to do that? They were there for our own good, 70, 80, 100 years ago. But they've never been for our own good. They've only been there to try to create issues and then turn around and solve them, which then has added more money into the coffers of the federal government. That's exactly what they're doing now. We've seen inflation go up, and as we're seeing, Europe going into a recession, we don't see China going into a recession. Why? Because China has already lowered their rates, and they've significantly lowered their rates, and now their economy's flattening out. We're not seeing it overheated. This is the criticism that the Fed is receiving right now. Look over at China. They're actually starting to print money a little bit or have quantitative easing. Well, if you were to ask, any of the corporations that had, experience, I'll say this, experienced executives, not the newer generation executives that don't know what they're doing. If you had that, well, then they want quantitative easing, because then they can borrow money against the Fed on cheap basis, and they can utilize artificial intelligence to help their business be more efficient and to lower costs. This is something that I've advocated now for a while. Yesterday, we had an article about loan officers, and I did go over that if artificial intelligence which will be introduced into loan officers, will lower the price of interest rates. Now, let's take a survey out there. Anyone out there, do me a favor. If you would rather have loan officers over interest rates, tell me below. Or would you rather have lower interest rates over high costs of, or high fees of holding loan officers? Well, then tell me as well. So I want to know. But this begs the difference of what is happening right now, and that the Fed is definitely in control of our lives. We don't have that control. I hope that sometime in the next year and a half, we can change all of that. All right, so I started this whole thing off saying, hey, what is I asked I asked Alec Trebek for $1,000. I gave him a question, okay? What is the number one things Americans think that they can do to qualify for a loan? Well, here it is. 40% of Americans think winning the lottery is the best shot at home ownership. This is hilarious. And I'm gonna tell you now that 40% of Americans who think that do not have a plan on how to buy a home. So let me back it up, okay? If I'm young again, and if I had to rewind and do it over, what would I do? I would, somewhere after I graduated, if I didn't have a clear path of what I wanted to do on a career basis, I would have gone into the military. And if I go in the military for 2 to 4 years, what do I get? So when I come out of the military, I get a VA benefit, Veterans Administration. Well, the VA will, they have housing advantages, and one of the housing advantages is 100% financing. Okay, no down payment down. You do have some closing costs, but they have it, and they also have significantly under market rates. So today I went in and I met with a gentleman who bought a house 4 years ago with his VA loan, put no money down, had very little closing costs, and has made the payments for 4 years. Now he wants to sell his home, and I just did a net seller's sheet, how much money he would make. He's gonna make about $170,000 on holding an asset which he lived in for 4 years. Think about that, guys. You're not thinking it through. If you're thinking that the only way to buy a home is to win a lottery, you're misguided in what you're thinking, and you're not planning it through. Now, some of you are gonna say, hey, I don't wanna go in the military. Guess what? I did a lot of things in my life that I didn't wanna do either. I did it, and it reaped the benefits going forward. Think about it. I'm just giving you one avenue. There's significantly more avenues out there. You can go in and get into student loan debt. That's fine as well. But you're gonna have to repay it. Obviously, that's what happened today in the Supreme Court. you can't have someone wave a magic wand and get rid of all your bills. That's kind of ridiculous to think about, So with that being said, let's get off of this, mentality of, oh, poor pitiful me. I don't, I'm never going to own a house. I need to win a lottery. No, put a plan together, guys. Put a plan together. It doesn't matter if you're single or by yourself, talk to somebody else, right? The Dreamer program that went through, 2 months ago, the state was going to put 20% down for you. So all you had to do was qualify for 80%, which had no mortgage insurance. And a lot of my clients only put down 15% and used the other 5% for closing costs and then lowered their rate even more. So it got to a point where even the people that would never have qualified for a loan qualified. This is insanity. It's going to be the future. I've already said it. Fractionalized mortgage is the future. Plan for it. If you need some help on planning, hit me down, DM me, whatever. I'm here to get everybody in the house. If you own a house, the chances of you retiring and having a good life is significantly higher than a habitual renter, no questions asked. All right, and for the bad news of the day, yes, you see it, guys. I know, I already got my barf bag out and I've used it. My God, what had happened? Look at these rate jumps. We looked at conventional went up 9 basis points. We're looking at FHA went up 11 basis points and a whopping almost 20 basis points, just rolling past 7% as jumbo. Wow. I was predicting again that we would go under 6.6, but man, it's the resiliency of the Fed to keep, having their little bitty powwow sessions in between the meetings it just hurts the market. And it's like they're trying to hurt the market on purpose. They're not trying to help the market because they want to manipulate it. And this is pure manipulation. So that's just my 2 cents on my soapbox. Thank you for putting me full screen. All right, guys, we will see you on Wednesday. We might have a special edition on Monday, maybe not. But if not, we'll see you on Wednesday. If not, have a happy July and a great 4th of July. God bless America.